about those ADP numbers? They were kind of bad, weren't they?
Yeah, another nick in the economy's chink of armor here. I think the evidence is starting to build that maybe we lost a little bit of momentum in the job market, at least in the last few months. Although I would issue some warning on these ADP numbers. They can be very far off from what the government actually reports. Of course, the big jobs number this week is on Friday. It wasn't today. ADP numbers are sometimes as much as 100,000 off from what the BLS numbers are. So I think we have to reserve a little bit of judgment about what the government's going to report.
Okay, John,
I guess it's tomorrow at this point.
If you are correct, or maybe because you're correct, you notice the market really didn't sell off all that much today. I mean, it's down. The Dow is down 25, 30 points, but not the huge sell-off that you would expect. Is the market, in effect, pricing in a bad report for the BLS on Friday?
Well, I think it's pricing in a little bit of a bad report and also kind of pricing out some of the weight that it puts on these ADP numbers. They tend to get a lot of attention from the media, but frankly, I'm always skeptical when I read them.
Let's talk about the Fed, John. Do you think anybody at the Fed is going to lose much sleep over this jobs number? Are they going to go, we basically said the economy was softening a little, no big surprise here?
I think today's number not, but if Friday's number is weak, then they certainly will lose a lot of sleep over it. Their mission number one is to get the unemployment rate down further and create more payroll employment growth. We had a weak jobs number for March. If we get another one, then, that's going to be very high on their agenda of potential problems to fix.
Do you think the people at the Fed are finally coming around to the point that maybe the jobs number or what they can do about unemployment is not all that tied to rates at this stage?
There might be some people there, but there are plenty of powerful people at the Fed who feel like they should be doing whatever they can to ease financial conditions as long as inflation is stable and unemployment is high. So, I don't think you're going to see Ben Bernanke waving a white flag anytime soon. If unemployment goes back up, they'll very likely be doing more.
But we have heard recently, unless I'm mistaken, some noises coming from some of the Fed folks, Jeffrey Lacker, that basically said, listen, we may be seeing higher rates in 2013, which is definitely, largely a contradiction of what Ben Bernanke and the rest of the FOMC said a couple of weeks ago in their press conference.
Well, Jeff Lacker is a hawk on the FOMC. He's a guy who worries a lot about inflation. You can see from the Fed's own forecast, there are plenty of people among the Fed officials who think the Fed could be raising rates as early as later this year. But the people who really matter, and that's Ben Bernanke, Bill Dudley, Janet Yellen, aren't even close. They're not even close to being at that point yet. I don't think you can put a lot of weight on what Jeff Lacker says on that point, simply because he's very much in the minority.
Okay, let's play a little guesswork with the numbers. ADP, or rather the consensus estimates for Friday, are something like 165,000 or so new jobs. Did I get that right, Hilsenrath?
Yeah, I haven't looked at the consensus in the last few days, but it sounds about right. I'd say sub 200,000.
Sub 200,000, right? The ADP jobs report was kind of weaker by 40 or 50,000 jobs. That's why theoretically.
And that was just private payrolls. If you take out a negative government payroll trend, that's a sub 100,000. I think we are probably going to get something sub 200,000. And I think I wouldn't be at all surprised if the unemployment rate stalls out where it is right now. And that leaves us repeating this conversation again on Friday. Is the job market stalling out? Because that would be 2 months in a row of pretty weak numbers.
Right. Your assessment, though, Hilsenrath, is it's going to take something really bad, though, for us to see the Fed doing anything over the next couple of months.
So I do think that the Fed is in a position where it's planning on being patient on this front. Bernanke said something very important in the press conference a week ago. He was asked if the end of Operation Twist, this program that they're doing where they're buying $400 billion worth of long-term Treasury bonds, if the end of that program in June posed a risk to the markets, and he said no. So in other words, I think the view at the Fed is that they can afford to wait and watch this play out a little bit. they could let this one program run its course and then kind of restart it later on down the road if they feel like they have to. In other words, there is not a hard deadline on June to make a decision about whether to do more.